Hello, listeners. Welcome to the Morning Market Update, the podcast powered by AI. I am Joe.
And I'm Sarah. Today is February 2nd, 2026. Let's dive in. We are kicking off February with some serious fireworks in the U.S. markets. On Monday, the Dow Jones Industrial Average and the S&P 500 both showed resilience, managing to spring higher despite a chaotic backdrop in other asset classes. The Nasdaq also saw gains, fueled largely by a massive surge in Palantir, which soared after a significant earnings beat and a very optimistic outlook for the rest of the year. However, it wasn't all green screens. While equities were climbing, we saw a market spiral in commodities and crypto. Investors are aggressively dumping gold, silver, and oil. In the small-cap space, the Russell 2000 is struggling to keep pace as concerns over interest rates resurface. The big story for traders right now is the decoupling we're seeing. Usually, when stocks go up, there's a sense of risk on across the board, but right now, money is fleeing store of value assets like gold and diving into specific high-growth tech names. On the losing side, we saw companies with heavy crypto exposure, like Robinhood, sliding nearly 10%. It's a polarized start to the month. If you're in AI-integrated software, you're cheering. If you're holding precious metals or digital coins, it's been a rough 24 hours.
Moving north to the 6-9, the Toronto Stock Exchange is also seeing some significant action, specifically in the materials and mining sectors. The TSX has been the center of a metals frenzy lately. The big headline here is Eldorado Gold Corp, which has agreed to acquire Foran Mining in a deal valued at approximately 3.8 billion Canadian dollars. This is a massive play for copper, as Eldorado looks to diversify its portfolio. It's a classic move we see when miners want to ramp up production quickly following a year of high metal prices, even if we're seeing a temporary dip in gold and silver prices today. On the corporate side in Canada, we're also seeing a bit of shakeup in how companies are valued. A new report shows that Morningstar DBRS is dominating the Canadian credit ratings market. Interestingly, they tend to give ratings that are a full notch higher than S&P or Moody's. For investors, this is what we call ratings shopping, where companies might seek out the most favorable grade to lower their borrowing costs. It's something to keep an eye on if you're holding Canadian corporate bonds. Overall, the TSX is navigating a tug-of-war between strong M&A activity in mining and the broader sell-off in the underlying commodities.
Taking a look at the global stage, it's a tale of two continents. In Europe, markets like the FTSE 100 and the DAX are trading with a bit of caution as they digest the news of a partial U.S. government shutdown. Over in Asia, however, the sentiment is much brighter. Markets in Japan and Hong Kong are headed for gains this Tuesday morning, buoyed by solid U.S. factory data. The real standout is India's Nifty 50. We are seeing a potential foreign buying rush there. This follows a landmark trade deal between Washington and New Delhi. For months, Indian stocks have underperformed compared to their Asian peers, leading to record outflows. But with this new agreement, which includes lowered tariffs, analysts expect a massive influx of capital back into Mumbai. In the currency markets, the US dollar is struggling. It's on its deepest slide since the trade wars began, as traders react to the shifting geopolitical alliances. Meanwhile, oil has steadied after its biggest drop since June, with all eyes on Iran and the easing of certain regional tensions.
Now, let's look at the big corporate stories moving the needle in North America. First up is Palantir. They didn't just beat earnings, they absolutely crushed their revenue forecast for 2026, projecting between $7.18 and $7.2 billion. That's a huge validation for their AI data analytics platform. We also got confirmation of the SpaceX and xAI merger, which is creating a massive private tech conglomerate under Elon Musk's umbrella. In the healthcare sector, AstraZeneca is making a strategic pivot. They've announced their listing in New York while simultaneously pumping billions into China for innovation. It's a delicate balancing act, trying to tap into U.S. capital while utilizing China's rapid pharmaceutical advancements. We also have to mention the obesity market. Goldman Sachs is calling 2026 a pivotal year for pharma companies in this space, as several new oral drugs are set to launch. Finally, for the sports fans and speculators, New York's Attorney General has issued a stern warning about prediction markets, those yes or no betting platforms, ahead of the Super Bowl. It seems the regulators are worried about the lack of oversight as these platforms explode in popularity.
Shifting our focus to international business, the spotlight is firmly on Saudi Arabia. The Saudi Capital Market Authority is reviewing rules that limit foreign ownership in local stocks. This is a huge step in the kingdom's Vision 2030 plan to open up the Tadawul exchange to the world. As of this past Sunday, the market opened itself to all types of foreign investors for the first time. This could trigger a massive reweighting of global emerging market funds. In China, the economic mood is, well, a bit strange. While big players like AstraZeneca are investing there, the local consumer sentiment is summarized by some odd trends. An app called Are You Dead?, which checked in on elderly people, was recently shut down, while a crying horse plushie is selling out across the country. Analysts say these gloom trends reflect a population struggling with a slowing economy. In the tech world, the crypto haven of Hong Kong is seeing investors stay cautiously upbeat despite Bitcoin's massive tumble. Bitcoin actually dipped below $74,500 recently, its lowest in 10 months. This has wiped out billions in market cap and left many wondering if the crypto-friendly expectations of the current U.S. administration were priced in too high, too fast.
On the policy and geopolitical front, the primary driver of market anxiety is the U.S. government. A partial shutdown began on Saturday after Congress failed to pass funding legislation. President Trump has stated that a deal is pretty close, but House hardliners are making the final steps complicated. This shutdown is creating what macro investor Raoul Pal calls a liquidity air pocket, essentially a temporary shortage of cash in the system that's causing high beta assets like Bitcoin to sell off. In international diplomacy, the U.S. and India have reached a definitive trade deal. President Trump announced that India has agreed to stop buying Russian oil in exchange for lower U.S. tariffs. This is a massive geopolitical shift that realigns India more closely with Western energy markets and weakens Russia's economic grip. Lastly, the nomination for the next chair of the Federal Reserve is causing jitters. Analysts are flagging this nomination as a key trigger for the current volatility in gold and silver, as investors try to guess whether the new chair will be a hawk on inflation or a dove who favors lower rates.
To wrap things up for our investors, the key takeaway today is resilience versus volatility. While the major stock indexes are holding on to gains thanks to strong tech earnings like Palantir, the alternative markets, crypto and commodities, are in a tailspin. We are seeing a significant rotation of capital. The U.S.-India trade deal is a game-changer for emerging market portfolios, and the opening of the Saudi market provides a new frontier for diversification. However, the U.S. government shutdown remains a wild card that could tighten liquidity further if it drags on. Keep an eye on those Fed nomination hearings, as they will likely dictate where the dollar and gold head next. It's a market that requires a sharp eye on both the earnings reports and the geopolitical headlines.
That wraps up today's update. I hope you gained useful insights into this complex market landscape.
Add your thoughts in the comments and follow us for more updates like this. This is Sarah
And Joe, signing off.